Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Sonia Shenoy. Had you woken up late, this wouldn't have looked like a market which, was extremely scared this morning. A 200-point recovery on the Nifty, virtually on the throes of that 18,000 mark as we speak, just about 13 points away. And that's led by the Nifty Bank, which is up 250 points. And we have the mid-cap index, which also has practically moved into everything but green right now. So, had one looked at the market just now, just these rates, it would look like a normal day.
Absolutely, and a better day than a normal day, right? Yeah. Where you got that dip, you got a chance to buy, especially some of the stocks that are moving around with so much strength. The banks, just look at the way they're moving right now. The bank Nifty, as we speak, is up almost 250 odd points. So let's do one thing. Let's talk about a few sectors that are moving around. There's banks on one side, that's of course ruling the roost. But on the flip side, there's IT that's under a lot of pressure. There's some negative commentary that came in from Goldman Sachs in its recent report. Nimesh is here to give us the details on that. Nimesh.
Today's standout is on the IT names, and coincidentally, on a day when Nasdaq was down 5% last night, Goldman Sachs has gone ahead and downgraded the top Indian IT names, largely on back of still high valuations, and they're not factoring in the down cycle ahead. So they've downgraded TCS, Infosys, and Tech Mahindra to sell from buy, and the only upgrade is to Wipro to buy from earlier sell. Now they believe that the US dollar revenue growth will start to materially slow down from here. So Goldman Sachs has cut the dollar revenue forecast of the top 5 Indian companies by 4% to 6% now versus their earlier estimate of 10%. All this within this backdrop, they believe that the PE multiples are still very high and not sustainable. So coming to individual names, on Infosys, they've downgraded the stock to sell now from buy. They've cut the target price sharply to 12.24 versus the earlier target price of 17.22. They've also cut the EPS estimates between FY23 and FY26 by 6%. On TCS, they've downgraded to sell now. They've cut the target price sharply there to 2611 versus the earlier target price of 36.78. Even for TCS, they've cut the FY23, FY26 EPS estimates by 5%. On Tech Mahindra, again, downgrade to sell, but they had a neutral earlier, and they've got the target price of 686. The only change is Wipro, where they've upgraded the stock to a buy from sell. Again, the target price is 381. The upgrade on Wipro is purely on valuations. Otherwise, even on Wipro, they've cut marginally. They've cut the EPS as well. The big thing is they've downgraded the top 3 Indian IT names today to sell from buy, and they've sharply cut the target price and the EPS estimates as well.
Okay, thanks a lot, Nimesh, for that. Well, moving on, Ambuja Cements is the stock on our radar. It's higher in trade on the back of the news flow on fundraising. Nigel is here with details. Nigel, over to you.
Well, that's right. Ambuja Cements, the management will be meeting on September 16th, and they're talking about raising money. It could be via various instruments, whether it's equity or other convertible instruments as well. The details will be awaited on the fundraise will be to who, and what is the quantum out them, and what's the purpose of this fundraise as well. Keep in mind, on a standalone basis, they are sitting on cash in excess of around 4,000 crores. On a consolidated basis, that's more than $1 billion of cash is what they are sitting on. So the street is enthused on ACC and Ambuja Cements. And why is that? Because a change of promoter is, something that they like, and various other...
On that, we do have the wholesale price inflation, which has been flashing at, the bottom of your screen, 12.41% versus a poll of 13% in double digits for, I think, the 16th or the 17th month at a stretch, but slightly below what the street was expecting and slightly below month on month as well. We do have Lata with us. Lata, this is the one number that we have apart from the internals that we will be tracking. But
yes,
just this number tells you that maybe the worst perhaps is behind, because now we've seen a cooling off trend for the last 3 or 4 months in a row now.
Well, it is cooling off, but I think the important point is it is below expectation. The poll that we had, it's not a very big poll because a lot of people don't track WPI. But it's come in below 13%. That's the ragtag poll that Ekta could put together. So looking at some of the people who gave her the numbers, and that looks a little better. A 1 percentage point fall not 1%, sorry. It's a little more than that. It's a 150 basis point fall from the previous year. Previous month. The primary articles inflation is down. I was just waiting to look at the food inflation. I just missed it. food will be watched very closely because that's again created a bit of a stir in the CPI with rice becoming a problem again, partly because of patchy Kharif sowing. That's the manufactured products.
Food is actually
that's extremely
increased
positive.
versus July.
Yeah,
Food
that
is
was the worry.
9.93 versus 9.41.
Yeah, that I think is going to be the biggest worry, that food inflation is not coming down as much as it was expected to earlier. And that will have an outsized impact on CPI, which is the policy-making instrument. So this, if anything, ameliorates the worries that CPI created, because CPI had already told us that food inflation is high. It was 9.97 in CPI. So I think 9.57 in CPI. So it anyway is a bad number, and that's already known to the Reserve Bank. We have Rupa Regiritsuri, the Chief Economist at L&T Financial Services, joining us. Rupa, this 12.4 WPI compared to 13.93 year ago, is that a solace at all?
Yes, definitely it's below expectation, but still it is in double digit and, consecutively in double digit since last year's April. So I don't think that should give us any big relief.
Okay. Will the worry come primarily from food inflation? Manufactured products inflation is down about 100 basis points, not 100, 60 basis points, 8.16 in July, 7.5 in August. So what would your take be on core and on food? Food, it is up by about half a percentage point. It's 9.93.
Yeah, but there is a lot of seasonality because August, many regions had seen access to large excess rains. So,
Okay.
The standing crops get impacted of vegetables, fruits, etc. So, but personally, I feel food inflation will not be a worry for India because you see deficit in rice sowing also has shrunk considerably. Government has taken a lot of measures. We are seeing it in the prices of edible oils and all, which have actually come down sequentially.
Yeah.
And Rabi is going to be a very good season given the healthiest water reservoir levels. So food inflation need not be a big worry, if you take a forward-looking approach.
Okay.
I'm more worried about this manufactured price inflation for two things. One is imported inflation because of rupee depreciation.
Yes.
And secondly, we are all facing now supply side disruptions because of slowdown in China and, in other parts of the globe. So
Yes.
the point is that, so that will keep core inflation sticky.
Yes.
But food inflation need not be a concern, according to me.
Well, it's just that there are some, in the last 48 hours, some bad news coming from soya crop and weather disturbances in both Europe and the US. So there are some concerns that continue to mount on the global food scenario. Plus, of course, rice is becoming a fresh problem. So, I hope your optimism on food inflation is realized in the months to come. But you're right about core inflation. Even our core inflation in CPI went up by about 10 basis points. And today we got the UK inflation and yesterday we got the US inflation. Both those numbers, while the headline was kind of flat, core inflation spiked up in both cases. And that is going to be a worry for us as well. After listening to this WPI, have you changed your expectations from RBI? Since we got our CPI number and we spoke to you, we've got the US CPI number and our WPI number. Now, what are the final expectations from the Reserve Bank?
No, I'm still going by my earlier take that they will raise rates by 50 bips. Because, they cannot afford to now lower their guard because inflationary concerns are there. And currency is also on their radar.
Yes.
And if you look at the actions of other major global central banks, I don't think they are going to slow down their tightening in any way.
Point.
So 50 has become new 25 for me.
Yeah. Okay, got that. Thank you very much, Rupa, for joining us. So chances of a 50 basis point rate hike increasing, not just because of the WPI, but more because after our CPI numbers, we've also got US and UK CPI numbers, and it does look like the global central banks will be in a hiking mode, the Reserve Bank may not want to drop its guard, even for the unstated reason of currency protection. The markets couldn't care less. We have actually a rally on our hands.
Oh, it does. I just had one question, Lata. You know, an economist was making a point yesterday that even though the food inflation is rising, there's nothing that the RBI or the monetary policy can do about it. It's more administrative measures that need to be taken. In that context, do you just move on post this data?
Oh, no, you can't move on. You know, there is something like the amount of liquidity in the system. So, you know, why would, say, French beans or, you know, ladyfinger sell at 140 rupees? Because someone has the money to buy. So I don't think you can exclude the monetary policy over there. There is something like, you know, inflation expectations, which wants you to push the envelope and which creates a wage price spiral. So I don't think you can exclude monetary policy. The amount of currency floating in the system, you remove the liquidity and you will be able to control a bit of, you know, inflation spiral as well. Monetary policy has a role, but of course supply side factors need to buttress.
Okay, all right.
Just you know, apologies for speaking out of turn here, but 18,000 is here on the Nifty. You would have thought, you know, yesterday we closed above that 18,000 mark. This morning we were sitting with a 5% cut in the US markets, a 350-point cut on the SGX Nifty as well. And back we have 18,000 once again.
Dare I say this is a much better day than what it was yesterday, right? If you got the opportunity to buy on that dip, and there's a big recovery that you're seeing in the market, about 200 points or so from the lows.
Maybe it's time for me.
To be fair, the futures in the US markets also have taken off some of the losses. Not.
Welcome back. An interesting development that was announced by Pidilite yesterday is the fact that they've tied up with a venture capital fund, 100x VC, to identify strategic investment opportunities for an arm of the company, Pidilite Ventures itself. Pidilite Ventures, of course, has earlier invested in companies like Build Next, Find Make, as well as Carvaan. So can they look at more opportunities here? And what is the kind of money that they're earmarking for it? We have both Apurva Parekh, the executive director at Pidilite Industries, and Yagnesh Sangrajka, who's the founder and CFO at 100x VC, joining us on the show. Thanks a lot, gentlemen, for joining in. Apurva, you know, the first question to you, how much money are you earmarking for investments? And what kind of companies are you looking at in terms of investments?
We have not specifically earmarked any amount for this, but you know we will be very judicious and cautious in making the investment. The type of companies that we are looking for are, you know, fast-growing, innovative companies that have synergies with either our core or adjacent businesses.
Okay. Yagnesh Sangrajka is also with us, the founder and CFO at 100x VC. Yagnesh, you tell us, what are the kind of opportunities that you're looking at? And in a market like this, would it be easy to sort of, you know, see fruition in some of these opportunities, say, over the next 6 to 12 months?
Well, we are seeing a lot of opportunities, you know, at the early stage, exactly where we've partnered with Pidilite Ventures. So, you know, as early stage fund, our business is to look at dynamic founders who are doing something disrupting. And Pidilite Ventures has a very core business, and they are looking at opportunities around. So on the home improvement space, renovation space, smart building materials, etc., these are the areas which Pidilite is looking at. And since, you know, home instruction, all of this is on a rise, we are seeing a lot of startups who are bringing innovative solutions on the core, and then we are evaluating them, shortlisting them, working closely with the Pidilite Ventures team to evaluate whether these make sense for Pidilite's core objectives, and also help startups because Pidilite brings with it such a diverse set of expertise, including branding, reach out to distribution network. So it's a win-win situation for the startups and Pidilite Ventures.
It is win-win, but I wanted to understand, Yagnesh, you know, from your endpoint, how does this model work? Does Pidilite give you a commission for every investment that you bring for them, or is there any, you know, fees that you get? Is it equity-based, etc.? And what makes you confident of, you know, looking at companies better than Pidilite itself? Because Pidilite in the past has made investments in companies like Pepperfry. They've made strong investments which they've scaled up as well, including the likes of you know, WD-40, there was Araldite, etc. So what makes you confident of outdoing Pidilite itself in a space that they've been tracking very closely?
Well, interesting question here, but let me answer it differently. it's not about outdoing Pidilite. It's about bringing startups which are doing disruptive work in the same area, which can complement Pidilite's objectives and enhance their vision in terms of collaborating with these new young dynamic founders, which can strengthen their business model further. These startups have the potential to grow with the support of Pidilite. So it's going to be a collaborative partnership. And some of these startups can become very big with the support of Pidilite. So that's the answer to the first question. The second is obviously this is a long-term strategic partnership. These are not a relationship which is transaction-based. We work with Pidilite on a long-term partnership, and hence it's a long-term arrangement with Pidilite. So there is no commission per transaction. It's a long-term arrangement.
Okay. I have two questions here. Apurva, you said that you haven't earmarked any amount just yet, but how many investments would you be looking at over the next 1 to 3 years? And also, you said it will largely be in businesses which are ancillary to your own business. So is it just home improvement, building materials, or any other spaces that you're looking at as well?
The investment-wise, in a year, we would look at, possibly doing between 3 to 4 investments in a year. But as I said earlier, we will be very judicious and cautious, and we will make the investment only when we find compelling opportunities. As far as focus areas of investment will be around home improvement, construction, building materials, arts and crafts. Basically, all the core and adjacent businesses of Pidilite, we would look at companies which have good synergies with them so that we can add value to their growth and also benefit by collaborating with them.
We understand that you'll be judicious, Apurva, as you should be. Is there any internal benchmark that you have with regards to any sort of ROI expectation that you have in any of these investments that you would be doing? What's the kind of, I would rather say, MOI rather than ROI, multiple of investment as against return on investment?
See, I think multiple of investment is relevant for people who are looking at an exit in a defined period of time. While we are having a very long-term approach, where these businesses also add value to Pidilite and Pidilite adds value to them. Of course, we are looking and, we are obviously hoping for very good returns, very healthy return on capital that we deploy amongst them. But, the direction is very long-term. So multiple of investment may not be a right indicator, but it should definitely generate good return on capital on an overall basis.
So is there a possibility that some of these investments would eventually materialize in a takeover by Pidilite as well, because they are in ancillary spaces?
It is, it is very early to say, but everything is possible. It would depend on what is in the best interest of the business. Our focus should be is to decide based on what is the right thing to do for the business.
Right, Yagnesh, what struck me most from the press release that came was the offering of VAS, Venture Capital as a Service. Are you seeing a lot of other corporates enter this as well? Apart from Pidilite, what other partnerships do you have?
So currently, apart from the core investing business that we do, so we've invested in about 80 early stage startups since the launch of fund in 2019. So that's our core business. We work with early stage founders. And while we were doing this, we were talking to a lot of corporates, including Pidilite Industries as well. And we found that corporates also wish to kind of participate in the early stage in all the disruptive, innovative ideas. And hence came the idea of VAS, Venture Capital as a Service, because we understand, we know early stage founders, how the journey begins from the 0 to 1 journey of all founders. We've seen that through in our portfolio. So we wanted to start sharing our knowledge with corporates. And we are, of course, in touch with a lot of other corporates as well. Some of them we are working closely, early stages still. The relationship is quite new, but we hope to, grow this business, grow partnerships with a lot of corporates who are very keen to invest in early stage.
Okay. Apurva, since we have you with us, I have to ask you about the overall business, because the demand has come back in a big way post-COVID. The stock itself has given, returns of 35% just in the last 3 months. How is the business at the moment, and what kind of sustainable volume growth do you foresee?
Overall, I would not like to comment on the overall business situation at this time. As you know, we only like to make comments after the quarterly results, because it would not be right to make comments about the business conditions during the quarter. So we will surely comment on this at the end of the quarter.
Take that point, Apurva. But just a quick word on VAM prices. What are they at right now? At the peak, they were 2,600. They had declined to about 2,000. Has the decline continued in the second quarter so far?
Yes, VAM prices have declined and they are now below $2,000. So there has been a good decline from peak of about 2,600, which was seen a few months ago.
So they're below $2,000, right?
They are below $2,000, yes.
All right, we'll leave it at that. Gentlemen, thanks a lot for joining us. Very interesting discussion there. Pidilite seeking some strategic investment opportunities through its venture capitalist fund. For now, the market has seen a huge recovery, so don't lose sight of that. The Bank Nifty is charging ahead. It's up 400 points and a stunning comeback from the early morning lows. Let's slip into a quick break. In fact, on point, we'll get Aditya Agarwala with some trading strategies on the other side of the break. Stay tuned. Well, I must say this is a really resilient market. Compared to all the global havoc, our markets are standing tall with Nifty above 18,000 and a big comeback today. Aditya Agarwala of Invest for Edu joins us now on the show to give us some cues. Aditya, it's a stunning comeback, especially in the Bank Nifty. Tell us for the rest of the day, where do your preferences lie and what are the stocks you're looking at?
Good afternoon, Sonia. Thanks for the show. So clearly our markets are operating from a different planet, Sonia. It looks like, while, as you mentioned, global markets are down and out, our markets are just down 50 points, recovered massively from where we had opened, and especially the Bank Nifty, that clearly seems to be on a roll, absolutely. So 41,400, I believe, is an immediate hurdle. Once that is taken out, I won't be surprised if actually Bank Nifty heads to levels of 41,800 or 42,000 as well. Though price-wise, there is no correction or there is no sign of any weakness in our market. But clearly, if I compare it with the US markets, the divergence is growing larger now. So US markets are underperforming while our markets are clearly on a different ballgame altogether. So that divergence is something which is quite worrying. As a trader, I would strongly recommend lighten your positions because though the markets are looking up and above, but you should not lose sight of the fact that the US markets are correcting big time, and that is true case with the global markets as well. So overall, though the price-wise, I don't see any weakness, but yes, if somebody is holding on to large exposure or leverage position, I would strongly recommend lighten up your positions a bit because you never know, markets can turn for worse and just quickly go downwards. For the day, clearly, as I mentioned, Bank Nifty something which is looking extremely attractive, and 41,400 is an immediate hurdle. Once that is taken off, 41,800 is the next target. As far as the Bank Nifty is concerned, above 18,000, clearly looks like Bank Nifty 2 can test levels of 18,100 as well. Talking of some stock-specific ideas, then McDowell is something which is looking attractive. United Spirits, that can be bought at current levels. Targets could be about 880 to about 900 on the upside. Put a stop loss at 835 on the downside, broken out from a downward wedge, looking attractive. Second is, again, from the banking space, has to be the PSU space is buzzing around, and Canara Bank is something which is looking very good on chart. So 255 will be the target here with a stop loss at 243. One can go long on Canara Bank as well.
Take that point, Aditya. Thanks a lot for joining in. And the 48,000 target, 41,800 target that you have on the Nifty Bank would take it to a record high. The Nifty Bank is within 1% from its record high. Who would have thought that on a day like this, with so much uncertainty in the globe, we have the Nifty Bank rallying over 800 points from the lows and within 1% from a fresh record high out there. A lot of stocks.
Well, here's the big CNBC-TV18 exclusive. Vedanta and Foxconn will invest over 1.54 lakh crore rupees to set up a semiconductor manufacturing facility in Gujarat. Anil Agarwal, chairman of Vedanta, joins us now to take us through the company's decision and explain more about the joint venture and the road ahead. Mr. Agarwal, thanks very much for joining us here on CNBC-TV18. Let me start by asking you about your decision to pick Gujarat. What is it that the Gujarat government put on the table that made this so attractive for you?
One is that this was a very, very important project for India. There are only 3 countries who has doing Korea, China, Taiwan, and this will be the India. Every country is looking, and because of the Mr. Narendra Modi, our Prime Minister initiative, he really focused on semiconductor and the display glass. So this will be changing our India. Today import is $35 billion, going to be $300 billion in 7 to 8 years time. It was not in our hand to select the site. It was a very independent agency, Foxconn. We had 2 other consultants and the experts. They've been working last 30 days, more than 30 days, maybe 1.5 months, to go around all the places because they had a specific requirement, whether it's a land, whether it's a apart, more of a technical, whether land, port, skilled people, the university has to be around, all this factor, and of course all the other power factor. So they have recommended. All other state is very, very capable, and we finally nailed down to, and recommendation came for Gujarat, and we have gone there. But I must tell you, it's not only Gujarat. Maharashtra, we are going to create a huge hub for developing the iPhone, EV, all other factor, the TV manufacturing, laptop, cell phone. So these things will be developed a huge cluster, which will be probably bigger than what we have in Gujarat. Is just making a fundamental raw material, a glass and the semiconductor, but that has to be used into the various product which will be developed. First preference would be Maharashtra and the other state also.
Okay, several things that you've said there, Mr. Agarwal. So let me quickly jump on to the last point that you made. You said that you are looking at manufacturing of cell phones, laptops, and of course electric vehicles as well. You believe that the first preference for that hub to come up will be in the state of Maharashtra. How soon are you anticipating to get started on that? Will that also be part of this joint venture with Foxconn, or will that be addressed separately?
This will be addressed separately because this is a 2 separate things. One is we are, and this is not only we are going to do it, there are hundreds of other companies, because what is happening? What is the vision? Vision is today every child who is 15 years old or more, if he has a laptop, he goes to different level.
Yeah.
Today, laptop is available at 1 lakh rupees. Once you have a chip and the glass available, I assume that the laptop can be available at 30,000-40,000 rupees or less. It all depend, because India is a very innovative, very entrepreneurial country.
Yeah.
That's what happened in US. A lot of people will come out with a new design, but the basic heart of the thing is glass and the semiconductor, which will be produced locally. Now you don't have to go for the branded product. You can develop whatever way you want. We don't have to make a fancy product. We can make a simple product, and that is up to all the entrepreneur who want to do it.
No, so I just want to understand, Mr. Agarwal. I get what you're saying, that we need to ensure that there is affordable mobile phones, laptops in the market. But is that a space that you're looking at getting into? Are you going to be manufacturing as part of a joint venture, laptops, mobile phones, etc.? Is that the next step that you're looking at?
Not at all. Not at all. But we are going to create a cluster. When Maharashtra is very important, Karnataka is very important. Maybe we can look at other states also to encourage from the 5 crore to 50 crore to 500 crore. Some of the higher product like EV vehicle, we might think to do with ourselves, but we at the moment let's focus purely on developing the semiconductor and the display glass.
Okay, so you're saying that you're not looking at getting into manufacturing laptops or mobile phones. You could look at the possibility of entering the electric vehicle market. I'll come back to that in just a second. But let's talk about this joint venture that you have with Foxconn. It's a 60-40 joint venture is what we're given to understand. Can you take us through the terms of agreement between Foxconn and yourself?
I can't take the detail. You have to talk to my people. I can just take at my level in general that that's not going to help you anywhere. What we are talking, we are going ahead. We are very confident. Please give us a good wishes. These are the very difficult projects which we have always done. The thing this will take India at a very different level. As central government, state government, the energy level which is flowing at this point of time is very, very high. And let's go with that spirit.
Right. So when do you hope to, you said that the finer details will be given out by your team, but when do you hope to get things moving on the ground? When will we move closer to starting the work on the ground now that, the decision has been made in terms of Gujarat being the location? What about any further approvals that are required both from the central government to ensure that you can get started? What are the timelines that we're looking at?
All the approvals are in place and they all are doing the final thing. But parallelly, we are looking 2 years' time that we should have the product to be out in the market.
Okay, so in 2 years...
So that is what we are looking at.
Right.
And everybody is working towards that. We have location, we have nailed down Gujarat. And we are working. We believe that the groundbreaking ceremony will happen as soon as possible. So we can do that. Entire team is working. Everybody is working to have a groundbreaking ceremony. And we are going to start both projects. One is your making the semiconductor glass project, which we are already producing in Taiwan, in Korea. We are going to have 100% owned by Vedanta. And that is also parallelly we are going to start.
Okay, so the glass project will be 100% Vedanta, and of course the semiconductor facility will be the joint venture with Foxconn. Mr. Agarwal, how will this be funded? 54 lakh crore rupees is what you have put forward as the number. How is this going to be funded?
Yeah, it will be, we have, as you know, Vedanta this year will have a $7.5–8 billion profit. We have a lot of good cash flow with us. For this project, there is not a single financial institution who does not want to fund us. We have to choose whom we take it. 40% or 38% what Foxconn has taken equity, they will bring in their money. With the reputation of ours and Foxconn, money will never be a constraint. Detail we can always work out with you. But for this kind of project, money will never be a constraint.
Yeah, I would imagine that money will not be a constraint. You've given us the number that Foxconn will hold 38% in the joint venture. What I'm trying to understand is, will any funding for this joint venture come from the listed entity, from Vedanta?
Yes, it will be part of Vedanta Limited. And this is the part of Vedanta Indian company, which will be one of the subsidiary, will be executing this project.
So could you give us some estimate of the kind of funding that will come from the listed entity, sir, for this project to be taken forward?
Yes, and the debt will come, equity will come from this, and debt we will take from the market.
And what kind of debt are we talking about? How much equity, how much debt? What will the split be?
I can give you the detail. But I can tell you at this point of time, let's leave it here, that our people can give you all the detail. Everything is in the press release. I'll send you the press release. The detail is there. But let's celebrate and enjoy. And India is a very sweet spot at this point of time. I've never seen in my 35 years career this kind of positiveness which I can see today. In 2 days' time, there is not a single institution, single equity provider or the debt providers, they all are looking forward something like this. How this government has cracked down, this will create number of employment. Direct employment will be 100,000 people, as we have said, and it will create cluster in a various state because the demand, like a TV, I believe the TV cost will be half of the cost. A basic TV which everybody in India can have the TV, that is the aim. And so this is the fundamental raw material which we have cracked, and if this can happen, India is a place of entrepreneur. I'm a startup. I'm going to the universities. Our people are going to the universities, encouraging our startup, encouraging our young people to start this kind of venture where the raw material will be provided. Huge market. There is all the country which produce this, they export. India is a place where you produce and you can consume also. So I am very excited that let this happen. Lot of things will be unfold as we go forward.
Yes, I can see the excitement. You've been tweeting, talking about how this is going to move India a step closer to becoming Silicon Valley and move India from being a chip taker to being a chip maker. So I can see that the excitement is visible, Mr. Agarwal. But let me understand from you, in terms of next steps now, you said that you anticipate the groundbreaking ceremony will take place shortly. If you can just lay out for us the next steps towards operationalization of this joint venture.
Yeah, the entire responsibility to bring in the product will be of semiconductor will be Foxconn. We are supporting and helping to provide the land, building, our equity, debt, government approvals, bringing all the local support will be from our side. Entire responsibility to make. Chairman Wong is very, very keen to start this project as soon as possible, and that will be their responsibility, and he is very confident that we'll be able to produce first product within 2 years' time. The same glass we are already producing in Korea and in Taiwan. We are going to, by and large, with the better technology, bringing in here and duplicating to start producing display glass. Display glass will be very big breakthrough. It's called fab, and we are going to put everything into one location.
Okay. Mr. Agarwal, let me move away from this project to just talk about another development that has taken place. We understand that the government is now appointing bankers as far as the 8ZL residual stake sale is concerned. We've spoken about this previously as well. What are your thoughts on this process from here on? The last time we spoke, you said that anyway you can only buy up to 5%. Does that stand?
Yeah, we can only buy up to 5%. We look at what pricing is coming, and government was very keen because the cash on the table, and I believe that is happening. They might do it in one tranche, they might do it in two tranches. So whatever they come out, ball is in their court. We are there and watching, and we fully support them, whatever decision they take.
Mr. Agarwal, on the disinvestment front, BPCL, of course, is off the table. You had expressed your interest in pursuing BPCL. We don't know when that will be brought back on the disinvestment calendar. But any other contenders that you are looking at, Container Corporation, for instance, would that make any sense for a company like yours, for a group like yours?
I really not put in a thought, because I always like fundamentally is government has decided that government has no business to be in a business every day to monitor the business, to fund the losses, or to look after the management. They have a lot more to do. That's what I believe the government want. And the whole world is looking. If government come off with their government companies, I have a feeling that equity value can go up to 4 to 5 times what a government company has equity value today. And the government realized this, that how much value can be realized, and that can be used to develop India. And as and when they decide, I always said why to privatize also. 20% company can be privatized, 80% company can be corporatized. And I've been talking to them and they're very excited. And they want to make sure that they take the right step and the whole world run on the basis of democratic world, run on the basis of corporatization. So company, today if you see L&T, today you see ITC, today you see SDFC Bank, ICICI Bank, there is no particular owner and they run so well. So why can't all the government come out of the business, create phenomenal value, and this production can go to 3 or 4 times, and the employment can be generated 3 or 4 times, including the defense sector. You have 52 factories of defense, which is running probably 10-20% capacity, and it has a huge capacity. Why can't we corporatize it? And today the whole world, if you see, all the companies run by the Indian.
Yeah.
So don't underestimate Indians executive. They can do phenomenal job.
We seem to have lost that line with Mr. Agarwal. We'll re-establish connect with him. Mr. Agarwal, sorry, we lost you for just a second. You were saying that a lot of confidence in the India story at this point in time. And that's what I want to ask you, Mr. Agarwal. Give me a sense of what the commodity landscape at this point in time looks like in terms of global prices. What do you believe the trajectory is likely to be given both the supply and demand situation?
You're talking about the commodity price?
That's right.
Yeah. See, the commodity is still going to be in a short supply because there is no new mines are opening, especially India, where our 40% of our revenues goes into buying a commodity. And India has a huge potential to produce these commodities. And our public sector companies who are producing commodities, they can definitely turn around and increase the volume or the capacity 3 to 4 times if this company can also be corporatized and the professional management can come in. But as far as the price is concerned, I have seen some price has been tapered down, but it's the short term. Price is going to remain, as I always said, about $8,500 of the copper. Aluminum is going to be around $2,500 to $3,000. Zinc is going to be $3,500. So gold is again around 1,700 to 2,000. So these are the prices. Oil will be hovering around between, I always said, around $100, $85 to $100. So these are the price, which is very important for India to produce this commodity themselves. And that's what government is focusing on.
Well, yes, as far as crude is concerned, we finally see crude prices at this point in time trending below $100 consistently for the last few days, and the hope is that that will continue. Mr. Agarwal, I just wanted to get one quick reiteration.
I must tell you,
yes.
Vedanta is the only producer of oil in the country, and we supply to the government below $30, all in. And there are potential that 10 times more oil can be produced. And all the worldwide, there is not a single oil company today is not looking to come to India. They are waiting for the new policy to come. Today, the government has 70% levies on oil. Worldwide is at about 40%. And government is considering to reduce the levies. The moment levy is reduced, you will see the kind of people will come. Most of the company will come, including the local entrepreneur will come forward and start producing oil in this country.
Yes, you've been bullish about that scenario for a long time, Mr. Agarwal. But let me just get a quick reiteration from you going back to this joint venture. You said that it will be funded by debt and equity. Foxconn will hold 38%, and the funding will come from the listed entity. Is that correct? That's what I heard you say?
Yes.
Okay, so the funding will come from the listed entity is what you're saying?
Yes.
Right. In terms of capabilities now to be able to take this project off the ground and get started, Foxconn, of course, brings in the technical know-how. But what other changes are we likely?
And the equity.
Yes, and the equity. Yes, 38% is what they bring in as well, the technical know-how and the equity. But what else are we likely to see you change within the organization, to beef up capabilities and be ready to deliver on this opportunity and this big bet that you're making?
No, this is my business. We are the only producer of optical fiber. This is a glass. We're talking about glass. Last 20 years, I'm in a glass business. We're the largest producer of optical fiber. We are the fourth largest producer of glass in Taiwan and Korea. So we understand this very well. And we are entrepreneurs. As we move forward, we can't have 100% surety of everything and move. We know there is a demand-supply gap. This is India. We believe in India. We are moving forward. And as we move forward, people follow us.
Well, you're clearly first off the block here when it comes to the semiconductor story. Foxconn and Vedanta, the joint venture, getting the go-ahead, getting the approvals. As you said, that most of the approvals are in place. You hope to operationalize the plant in 2 years. You hope to have your first product out in the market in 2 years. And of course, the site identified is the state of Gujarat, the investment of 1.54 lakh crores. Mr. Agarwal, it's always a pleasure. Appreciate you joining us here on CNBC-TV18 to take us through your plans with the semiconductor making aspirations that you have, and of course, where things are headed from here and what the next steps will be. Appreciate your time.
Thank you. Thank you very much. Really appreciate it.
Well, with that, it is time for us to take a break here on CNBC-TV18, but we're back in a minute with Business Lunch. That will take the action forward.